Hello dear children. Now in this video we will understand what is accounting equation and try to have a look at the elements or what this accounting equation is composed of. Okay, so let us start our discussion that this accounting equation, as we have already discussed in the previous video also, that it is the fundamental basis of double entry system. Okay, that is the dual aspect. Okay, that for every debit there is always a credit, isn't it? So that is the basis of double entry system, that is the dual aspect. Okay, but this dual aspect, when it is converted into an equation, okay, when it is represented mathematically, it will be like this, that is A is equals to C plus L. Okay, it says, okay, this accounting equation, it says that the assets must equate to capital and liabilities of an organization. Okay, so the amount of assets should equal to capital plus liabilities, which means that assets, it is composed of capital as well as liabilities, which means in asset, capital is also involved as well as the liabilities is also involved. Okay, so let's have a look at this, the basic accounting equation. So assets is equals to liabilities plus stockholders equity. So this is for your company. Okay, so this stockholders equity actually, it refers to the capital only. Okay, and I must tell you that this is your basic accounting equation. Okay, it is not A is equals to L plus C as mentioned out here. Okay, this diagram is actually wrong out here. Okay, this diagram is wrong, I mean the placement is wrong. It should be stockholders equity plus liabilities, because the basic accounting equation is A equals to C plus L. Always remember this. Okay, whenever you reach graduation level or university level, okay, that is the master's level, so these type of questions may be asked. Okay, so I must tell you my own experience. uh, there was an interviewee. Okay, there was a person who came to the college, okay, for an interview, and the person was asked, "Oh, what is accounting equation?" So the person gave the correct definition of accounting equation, but mathematically the proposition, okay, what is here is A is equals to C plus L, isn't it? But the person said A equals to L plus C, so that was wrong. It shouldn't be like this, L plus C. It should be always A is equals to C plus L. So there are some few, like some things or few things which you must learn. Okay, so this is the composition. Now, why C plus L instead of L plus C? It is a very simple logic that in organization there may be zero liability also. Okay, sometimes. So at that point of time, there will be only A is equals to C. Okay, so that is only the uh, logic behind this. Okay, it's only a rational. Okay, anyway, let us move on to this part: assets, capital, and liabilities. So what are these? By assets, we actually refer to the properties of an enterprise for the generation of income or sales in the future. Uh, you all have your books, copies, pens, okay, your clothes, your house, okay, your bank balance, your car, your bike, your scooter. So what is it actually? Your furniture, your bed, your mobile phone. What is it? That's your property, isn't it? So that property is only known as your assets. Okay, so an asset is something what is owned. Okay, what you own is actually your assets. What you have, what you possess, what is yours is actually your asset. Okay, so similarly, for a business concern, assets are there. Okay, and the assets, it can be like land, building, plants and machineries, okay, furnitures, computers, delivery vans. Okay, so these are your assets. Okay, bank balance or the cash that they possess with them, that is their assets. Okay, now let us move on to capital. Now, by capital, we mean the amount of money that has been invested to start a business, okay, to commence a business, okay, to initiate the process of business. Whatever the amount of money that we invest is actually your capital, okay, and it is also the amount of money which is needed, which is required for the running of or the proper functioning of your business in day-to-day life. Okay, and remember that it refers to the stock of fixed assets also, as I had shown you out here, that assets out here, it is composed of C plus L, that is capital plus liabilities. So in assets, capital is also involved. Okay, so by capital, it also refers to the stock of fixed assets. Okay, but this term you can relate with the economics also. Okay, this particular term. Now let us move on to liabilities. Now, by liabilities, we actually mean the financial obligation of a company that results in the company's future sacrifices of economic benefits to other entities or businesses. Okay, it's actually an obligation. For example, if you have purchased any commodity uh, on credit from a shopkeeper, okay, let's say you purchased 5 kg rice on credit, okay, that becomes your obligation, isn't it? That becomes a responsibility. Okay, so you must pay the amount of money to that shopkeeper, isn't it? It is an obligation you owe to that shopkeeper. So this is your liability. If you have taken loan from bank, okay, personal loan, home loan, car loan, education loan, okay, so that loan is actually your liability. Okay, so you can see it out here that asset is something what is owned, okay, what you own, and liability is something what you owe. Okay, now let us see the types of assets. Okay, the types of assets. So on the basis of convertibility, assets, it can be of two types: current assets and fixed assets. Okay, and on the basis of physical existence, it can be tangible assets and it can be intangible assets. Okay, and on the basis of usage, it can be operating assets and non-operating assets. So now let us discuss one by one. What is convertibility? Okay. Oh, sorry. Okay. So now convertibility. By convertibility, we actually we mean the rate of conversion. Okay. How fast you can convert your asset in liquid cash. Okay. How fast you can convert your uh, asset into the liquid cash. Okay. So depending upon that basis, asset is classified as current assets as well as fixed assets. Let me tell you about the fixed assets first. By fixed assets, we mean the amount of stock of the capital that has been fixed, okay, in forms of land, building, furniture, plants and machinery, delivery van or car. Okay, so that is your fixed asset. Look around you, okay, in your room, your furniture, your bed, your house, okay, that is your fixed asset. Okay, the stock of capital is fixed out there. Okay, it cannot be easily converted into the liquid cash. It can be converted, obviously, but it takes time. Okay, so that is your fixed asset. Now let's go back to this current asset. Now this current asset is actually an asset which can be easily converted into liquid cash. Okay, so for the business purpose, I have this thing out here, that is this current assets, inventories, trade receivables, cash and cash equivalents, okay, short-term loans, okay, that is given, okay, not taken, but okay, prepaid expenses, bills receivables. These are the examples of current assets, which can be easily converted into liquid cash, okay. And by non-current, we actually refer to the fixed assets, okay. Fixed assets are actually non-current assets, which are not current, okay. That is a non-current asset. That is your property, okay, whatever the property you hold, okay, that is your land and building, whatever. Plant, by plant we mean uh, big machineries, okay. It's actually a collection of machines, okay. Machine 1, machine 2, machine 3, machine 4, and then it together it makes a plant, okay. And equipments, okay, your patents, goodwill, trademarks, okay, these are your non-current assets or the fixed assets. It cannot be easily converted into liquid cash, okay. It takes time, but this time factor in terms of accounting is actually related to your accounting period, okay. So in accounting, the definition of fixed asset and the definition of this current asset, it can be like this. By fixed assets, we mean those assets of which the benefit can be uh, taken beyond the accounting period. I mean, beyond the accounting period. By accounting period, we mean 12 months. So beyond this period, beyond this 12 months also, you can get the benefit out of it. That is your fixed assets. Okay, if you purchase a house, so do you think that after 1 year that house will be diminished? No, it will not be. You can be able to use that house, okay, after 1 year also, and the next year, and the next year, and the next year, isn't it? So that is your fixed asset, by the way, okay. The benefit out of it, out of which can be obtained beyond the accounting period. That is your fixed asset, okay, in terms of accountancy. Now, current assets. Current assets are those assets of which the benefit can be obtained uh, within the accounting period, within the time span of operating cycle of a business, okay, that is 12 months, okay. Now, physical existence, that is tangible assets and intangible. By tangible assets, we mean those assets which we can see and touch, okay. They have the physical existence, like your furniture, your house, your books, your mobile phone, your computer, okay, your car, your bike or scooter. That is your tangible asset. By tangible, we refer to those items which we can physically see and touch, okay. And the examples are property, plant, equipment, furniture, computer, truck, okay, motor car, etc. What you can see and physically touch are all your tangible assets, okay. Now, intangible assets. By intangible assets, we mean those assets which we cannot see and touch physically, but they do exist in the books of accounts, okay. Their value will be recorded in the books of accounts, okay. Whenever you prepare accounts, their value will be recorded, okay. Rupees 1 lakh, rupees 5 lakh, okay. Patents, trademarks, goodwill, okay. So you can write in the books of accounts, but in uh, the physical world, okay, physically they don't exist. You cannot see, you cannot touch the goodwill, okay. Goodwill, okay, patents, trademarks, copyrights, brands, Okay, these are your intangible assets. So what is goodwill? Okay, let me just tell you in short. By goodwill, you can simply mean the reputation of the company. Okay, in the market. I mean the good name of the market. Sorry, a good name of the company in the market. Okay, for example, if there is a shop, okay, and that shop is very much famous, okay, and that shop is that shop has earned a name in the market, then that is, I mean, the reputation or the good name is actually your goodwill. Okay, patents. For example, if a person has invented something, okay, if a person has come up with certain formula, okay, which can make medicine for this uh, COVID virus, I mean the coronavirus, okay, what is the formula for that medicine or the vaccine, okay, that is your patent, that becomes a patent. Okay, or if an engineer, if he has come up with certain models or some kind of idea to make something, okay, then that is your patent. Okay, now the trademarks. Excuse me. This trademarks are also your intangible assets. You must have seen the trademark of an this Apple company. Okay, so that is your trademark. So tell me in the WhatsApp group or in person, what is the trademark of an iPhone? Apple company. Okay, or an iPhone. Now copyright. Our book, this accounts. Okay, it is written by Professor Monilal Das and Chandrima Banerjee, isn't it? So this copyright, it will become like the whatever the author they have written, okay, that is their copyright. Their materials cannot be copied by someone else. Like you type everything, okay, you copy down everything and you write your name, okay, whatever your name is, Mr. A, Mr. B, Miss B, Miss C, Miss D, etc., and you publish in the market. That is not correct. Okay, you cannot do it. It is illegal. Why? Because the authors, the original authors, okay, Professor Monilal Das and Chandrima Banerjee, they have the copyright. Okay, they have written, that is their original work. Okay, so it protects the right of the original authors, isn't it? So that is the copyright. Okay, uh, or if there is a song, okay, in the market, and you sing that particular song very nicely, and you tell your friends that it is your song. Okay, you have sung that song, that is your copyright. The brands, you just I will not refer to this operating and non-operating assets at the time. Okay, I will skip this part and move on to types of liabilities. Now the liabilities, it can be your fixed liabilities, current liabilities, and the contingent liabilities. By fixed liabilities, we mean such type of loan which has been taken for a longer period of time. Okay, a long period loan is basically your fixed liabilities. Okay, examples are capital, loan, debentures, mortgage, etc. These are your fixed liabilities. Okay, which can be paid after like 2 years, 3 years, 4 years, 5 years, okay, 6 years, 10 years. Okay, you can make the payment till that time. Now the current liabilities are those liabilities uh, which must be paid within 1 or 2 years. Okay, that is your current liability. Okay, it's very simple. Liabilities are very simple. Fixed liabilities, current liabilities. Okay, contingent liability I will not discuss at the moment. Let us just discuss fixed liabilities and the current liabilities. By fixed liabilities, we mean those liabilities which are taken for a longer period of time. That is, after 5 years, you will make the payment. Okay, after 10 years, you will make the payment. That is your fixed liability. Okay, or you will make the payment up to 5 years or up to 10 years. That is your fixed liability. Now, the current liability is a liability which must be paid within 1 or 2 years, basically 1 year. Okay, we assume it to be in the accounting period. Sometimes it can go beyond that also. So that is your current liabilities. Okay, I hope you have understood all the terms. Okay, that if, whatever you have discussed. But still, if you have any doubt or any kind of anything or any term that you have not understood, please let me know.